Hi everyone, and welcome back to TAINA Tips. Today, Sean and I are talking about a topic that sounds simple, but causes an unbelievable amount of operational pain. Common errors in CRS and CARF self-certifications.
Yeah, that's right, Kier. And these ones keep popping up everywhere. We're not talking about obscure edge cases. We're talking about the issues that derail onboarding, increase review times, and sometimes lead to incorrect reporting.
Exactly, and the first big one is not collecting all the required fields. It sounds basic, but honestly, it's one of the most common and most consequential errors we see. A complete CRS or CARF self-certification needs, at a minimum, the account holder's name, address, jurisdictions of tax residence, and TINs for each jurisdiction or a valid reason to have no TIN. With entities also required to provide an entity classification and in some cases controlling person information. Individuals and controlling persons are also required to disclose their date of birth and in some jurisdictions, their place of birth. But in practice, we still see plenty of forms where one or more of these are missing entirely. And in many cases, the entire controlling person section is either blank or only half completed, even when the entity has clearly classified itself in a way that requires it.
Right. And in that case, you'll get an entity claiming to be passive, ticking the right box, and then nothing. No controlling persons, names, no jurisdictions of tax residences, no TINs, not even an explanation. And for CARF, those same principles apply. You need the individuals behind the entity where required. Missing this is a huge red flag.
The second issue we see a lot is wrong or inconsistent names and addresses. People love acronyms. They love trading names. They love the official name, but with one word missing because it's shorter and looks nicer. But for onboarding and reporting, consistency matters. The name on the self-cert must match the name in your books and records. Same with the address. If your internal system has XYZ Holdings Limited, the form shouldn't say something else or use the operating brand. These mismatches trigger unnecessary remediation and exception handling.
And it's not just those cosmetic differences either. Different names or incomplete addresses can lead to failed due diligence, incorrect reporting, or the account being treated as undocumented. It's such an easy thing to get right just by simply aligning the form with your records.
Third area, entity classification. Honestly, this is one of the hardest parts for customers. For people who don't live and breathe tax classification, the difference between an active NFE and a passive NFE or an investment entity and so on is it's not so intuitive. We've seen entities that are very clearly passive, marking themselves as active just because active sounds better. Or investment entities that don't recognize they're classified as FIs under CRS or CARF.
Yeah, and sometimes it's just a lack of familiarity with the terminology. Most clients aren't reading the OECD commentary in their spare time, which for you might be their loss. But misclassification has huge implications. Wrong documentation, wrong reporting, and in some cases, the FI just not collecting the controlling person information when it actually should have.
And lastly, one of my favorites, tin issues. Tins are too short, too long, or they're just not a tin at all. A classic one, someone gives a VAT number or a business registration number because that's the one they know. But CRS and CARF require tax identification numbers for income tax purposes, not any number the entity happens to have lying around. The OECD has provided guidance on what is acceptable, and those rules need to be followed.
Or the other scenario that they didn't provide a tin and instead of just give a completely invalid reason like we don't use tins in our business or our accountant hasn't given it to us yet. If a jurisdiction requires a tin, you either provide it or you give a legally valid reason aligned with OECD guidance, not just a vague statement.
Exactly. All these issues create risk and delay, and they're the reason automation and validation matter so much. Getting these forms right